Good afternoon, everybody. My name's James, and you're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We have a pretty good day. Honestly, we've had a good October. One of the best Octobers I can think of in recent memory. October is usually just a bad month. It's just, I don't know what it is. It's spooky season. It's everything. Leaves are falling. So now the stocks fall. I don't know what it is. Normally it's just a bad month. This one has not been. Okay. And it's probably has to do with the wild news cycle and how everything's looking. But we do have some market news we got to cover today. Okay. We got to get you guys updated and informed. There's a lot going on. Next week in particular, we got the Magnificent Seven. If you guys don't know who the Magnificent Seven are, stupid name, I know, but they are the 7 biggest growth stocks in the world right now. Or maybe it's the country. I actually don't. I would assume it's the world. Because I don't know of any other really big growth company outside of the ones in America. But speaking of that, real quick, before I go into our term of the day, there has been some talk that they want to extend trading hours, especially the NASDAQ. So they want to make it. So normally it's like depending upon the exchange and the platform that you use, but the general stock market hours is 9:30 to 4 p.m. That's usually the standard hours. And the NASDAQ is talking about extending that. Okay. And the reason for that is because of the demand all over the world for U.S. stocks. Okay. I'm just keeping it at the forefront of your mind. Okay. If they're thinking about opening up, what happens when a shop opens up more hours? It's because they don't have enough time in the day to sell all the stuff to all of the customers that they have. Okay. So it's the exact same thing here. Just more exciting news to cover. I wanted to, for our term of the day, or actually it's the tool of the day today, I think, is I wanted to cover something that is it's not well known amongst retail investors, which would be anybody who does their own trading or own investments, as well as people who hire professionals, okay, who have investment advisors. And it's called BrokerCheck. So BrokerCheck, think of it like a rap sheet, okay? And I'll read the definition here for you by FINRA. But essentially, FINRA is a organization that it regulates broker-dealers, investment advisors, registered representatives, pretty much anything in the investment world. FINRA, ERISA, or the SEC are in charge of. And FINRA is one of the big ones. They're a huge deal. So they created this tool that allows anybody, you can Google my name right now. If you go to brokercheck.org and you type in James Walters, my history for the last 10 years will come up. Where I've worked, do I have any lawsuits, do I have any demerits, etc. I don't, by the way, and I want to knock on wood to keep that going strong. You can see what the working history of someone in this industry has been. And what you'll find is a lot of people have bad reputations and they don't necessarily have to disclose it to you. So let me read this real quick and then we'll get into the news. Let's see. Where is it? Here it is. BrokerCheck is a free tool from FINRA that can help you research the professional backgrounds of investment professionals, brokerage firms, and investment advisor firms. That's it. That's literally it. But no one knows this. No one really knows how this tool that you can use. And I bet if you have a financial advisor and you looked it up, it's probably a good chance you'd be surprised by some things. Okay. It is pretty difficult for an advisor to go a whole career without something, but I've definitely seen it. Okay. I've definitely seen some of the best advisors who are just really on top of their fiduciary standard. They can get it done. And obviously that's our goal here at 77, but you would just be surprised at how many people have like, oh my goodness, he sold that to a 85-year-old widow and he got how much money out of that? So you'll see things like that where you're just like, I cannot believe I'm working with this guy and that's what he's doing. Okay, so where's the news? Okay, real quick, guys. October, I think we talked about this. October's usually, did I talk about this last week? I don't know. I'm all over the place. I'm excited for the news today because just everything is going up. And honestly, guys, it is so difficult. I always say this, outside of your own health, people's wealth is the most important thing to them, and it's extremely, extremely edgy and touchy, and you have to be really careful. And honestly, it's a thankless job. You're almost never doing good enough. When the market's up, they want to know why you don't have more money, why they aren't making more money. And when it's down, they want to know why you're not doing your job to not lose that money. But really, it doesn't work that way because it's a ride. It's a marathon. It's not a sprint. It doesn't matter how quickly you got to mile 10 if you've got another 16 to go. Okay, so that's one thing. But the market's doing so well, I'm just trying to appreciate it because I know there's going to come a time, and I say this often here, this too shall pass, and there's going to be a downturn, okay? Now, we're optimistic. I don't think there's going to be a downturn for a while. There will be some volatility for sure, especially in the next 2 to 3 months, I think. It's inevitable, okay? It's inevitable. And last week, we talked a little bit about Trump's tariffs. The second, I wish Kamala would come out with her tax plan so I could have a little bit more ground to talk about, like the specifics in her plan, but everything is generic and not specific enough for me to bring up. So that's what we talked about Trump's last week, and I promise I'll cover Kamala's the second that it comes out. But guys, everything's going good, and I just want to encourage you, this too shall pass, okay? Remember, it's a marathon. It's a marathon. All right, let's read this news. And next week, we have a ton of really big earnings reports. The Magnificent Seven, if you guys don't know what those are, that's the 7 biggest stocks in America. Or maybe not the 7 biggest, but they're the growth-oriented companies in America and probably the world, to be honest. I can't think of a foreign company that's growing at their rate, especially over the last 20-ish years. Okay, I'm done riffing. Let me read the news because we got some stuff we got to learn today. Okay, so let's see. Major U.S. stock indexes were mixed Friday afternoon following a bumpy few days of trading as investors prepared for a huge week of critical economic data and earnings reports. That's next week. That's the Magnificent Seven. The Dow Jones Industrial Average was down 0.5% and the S&P was up 0.1%, with both indexes on pace to post weekly losses for the first time in 7 weeks. The Nasdaq Composite was up 0.6%, but well down from the record high it hit earlier in the session, so earlier today. On Thursday, the Dow finished lower for the 4th straight day, while the S&P and Nasdaq gained ground as EV maker Tesla had its best day in more than a decade. Honestly, I probably should talk about that because I have clients in Tesla, but it's such a volatile stock that 22% to me, it's like, who knows what's going to happen with that. Big believer long-term in Elon Musk, though. He just seems to have it figured out. You can say what you want about his cars. I'm not the biggest fan of the vehicle make. They fall apart. The batteries don't last long. It takes forever to charge. But the idea is there. Okay, again, I'm riffing. What am I doing? Okay. So Tesla shares, which soared 22% yesterday, were up another 2.5% Friday, while other large cap technology stocks were higher across the board. Nvidia, Apple, Microsoft, Alphabet, Amazon, Meta, Facebook, and Broadcom were all gaining ground. After several busy days of earnings releases from major companies, the calendar is relatively light on Friday. Shares of Deckers, DECK, were up 10% after the maker of UGG and Hoka footwear released a better-than-expected quarterly results and boosted its outlook. Centene? Sorry, I've never heard of this company. Centene. The ticker is CNC. Shares were up nearly 6% after the managed care company reported strong earnings, while Colgate-Palmolive, CL, was down 4% after releasing its results. McDonald's shares were down nearly 3%, leading Dow decliners on Friday. The stock has been under pressure in recent days following news that an E. coli outbreak in several states was tied to onions on the fast food chain's quarter-pounder burgers. Next week brings earnings from the report of the Magnificent Seven. Apple, Microsoft, Alphabet, Meta, Amazon, and Intel, as well as Intel, AMD, McDonald's, Eli Lilly, ExxonMobil, Starbucks, and many other noteworthy companies. On the economic data front, consumer sentiment data released Friday morning came in better than economists had expected. Investors are bracing for new key readings next week on inflation and GDP growth, as well as the monthly jobs reports. Market participants are looking for continued signs that the economy is on sound footing, as well as information that could influence the Federal Reserve's upcoming decision on interest rates. Yeah, look, not that exciting, right? Not this week, at least. Pretty boring week. It said, I know I had started this saying that everything is up, and the news just said that the markets were down. They're not. They're down because the last 6 weeks have been phenomenal. So, yeah, it's down 0.01%. It's definitely not down in the grand scheme of things. Everything's just been going to the moon, okay? And I don't really know what to say because it's terrifying and it's also exciting. Okay, it's both. And a lot of people think that this AI momentum is like the dot-com bubble in 2001, 1999 to 2001. But I just don't see it being that way because in 2001, I mean, we had Game Boys. Like we had, you still had to have a corded phone in your car. Like there isn't, you had the briefcase cell phone back in that era. So the technology is extremely different. And the way it works too with this technology that we've been seeing over, I don't know, I guess you could say the last 75 years, is that every single year it takes to build something. Or let me use the imagery. In 1940 or 1950, a computer, right? The computer that's in our cell phones was the size of a football stadium. Okay, maybe not that big, but maybe the size of, I don't know, a McDonald's. So a whole computer that now fits in our hand used to fit in a, 2,000 square foot building. That's what, 75 years? That's pretty crazy, the advancement. So it exponentially gets better over time, and every year it gets quicker. So the distance to close to something amazing or something just fantastical that makes everybody's lives better, the time to get there shortens every year because we're just so intense. It's so intensely working on it. So I definitely don't see it being a dot-com bubble. AI is here. AI is moving. It's probably 5 years away from something that's crazy. Like Tesla just came out with this robot that they came out talking about it. This robot that is now going to hold feti. I'm not sure which one the right term is, but it's this robot that will essentially act as this synthetic womb, but we kind of already have that, but this is like from the get-go, right? So this is from like insemination to birth. And they're also talking about these iRobot movie robots where they're going to be like, hey, you're not going to need a support animal anymore because you're going to have a support robot. And the robot's going to be able to help you with everything that you need medically. All of that stuff is not that far off. Probably 5 years away from anything that's actually functional and application-wise useful. But it's there. So I do think the AI stuff it's a massive play for growth. But it's not a massive play for 6 months from now. Okay, that period was last, October? A year ago maybe? You think of NVIDIA, SMCI, Palantir, WDC. Who are some other ones that I can think of? I can just throw it out at you. Qualcomm, Adobe, ServiceNow. All of these companies that have these AI plays, the really big growth period that was brief was over the last year. I think now we're looking at a 5 to 10 year pace where it's like, oh, these things could still 5, 10, 20x, but it's not going to happen over months. Now it's going to have to happen over years. So look, I think today's going to be the first time I've ended under 15 minutes in many moons. I'm proud of myself today. This was a easy, good day. The news, guys, the news is good. Again, the US stocks are the way to go. I just see it being a strong but volatile path upwards. Now, this isn't to say to put $1 billion or to put your whole net worth into, NVIDIA, but I think if you guys are in the market, it's a hold, it's a play. Just enjoy the wave, and remember, this too shall pass. Okay. All right, guys, that's it for today. As always, invest early, invest often. We'll see you next week.